So today we have a special journal review, and this is a journal that was sent in by one of our customers, and he asked us to take a look at his data. And we're going to take a look at a lot of different things in this review that we normally don't touch just because of the nature of the data and the journal. What we see on the home tab at first glance is that his profit factor is well above 1, a very good profit factor. And this means that he is currently profitable. We can see it by here, this green equity graph. The win rate of 41% is enough so that with a 2.5 reward to risk ratio, he is able to achieve profitable results. Let's take a look at the equity graph because there's something really interesting that we can find. So when we look at the equity graph at first glance, you see, yep, it's a positive, profitable performance. But once you start looking at how the equity graph forms, a few very interesting things become clear. So pretty much after this peak, this is where the equity graph almost peaked out. You can see there's 1, 2, and currently there was a third peak, but they're just slightly higher. So ever since here, he's not break even, but he is trading around the break even point. So from here on up. And also leading up to this peak, you can see that here are like 5 or 6 trades that make up almost 80% of his performance. So in this winning streak, there are his best performing trades that really helped him achieve this profitable return. But also, whenever we look at a peak, you see that each peak is followed by quite a significant losing streak, right? From here to here, around 5 to 6 trades. Then here as well, we peaked out here, and then another losing streak, the same here and then here. So this seems to be a pattern that is repeating for the trader. What I wanted to do then is go to the chart lab and analyze this further. We go to here our losing streak analytics, and we can see that here, this is the 6 trade losing or winning streak bar. And you can see when we look into the hover over the pop-up, we have frequency 1, which means we have 1 winning streak of 6 trades in a row. And then here for the red part, we see frequency 2, which means we have 2 losing streaks of 6 trades in a row. The good news is that when he had the winning streak, he was making much more money than what he lost on average during such a long losing streak. You can see that he made 2,261 on that winning streak, and on average he loses 716 when he is having 6 losses in a row. He has also a losing streak of 5 trades in a row. And this is what followed those peaks, right? So this is the long winning streak, 6 trades in a row, then here 5 or 6, and those are the losing streaks. So it seems like this is a natural occurrence for the trader. It's really interesting, something that he should probably study a lot to find out what are the market conditions after a peak that then lead to such a drawdown. So first thing I would recommend for this trader to study his losing streak and also try to understand what went really well here. Why is there such a stellar performance? What did he trade there? It's very simple. You just hover over the line graph, and then you can see each time you hit a trade, it brings up a data point. You can click on it and it brings up the trade. You can go to the screenshots to see the trades. And in this case, the trader has a lot of screenshots. So this makes this review process quite easy and straightforward. I want to go right into his exit analysis because another thing that is really interesting stood out here. So at first, there's a lot of going on here. What we often recommend is to just get a clearer picture is go to the basic filters. And we can first select here under outcome the winner. So we're only looking at the winning trades. And what we can see here pretty clearly is that the black marker is the exit of the trade, and the green part is how far the price has moved in his favor. The green horizontal line is his take profit. What you can see is that there's a lot of times where he is not able to capture the high of the trade. So here, for example, the trade went a lot in his favor, but he closed the trade here for a multiple of 0.4, but the trade would have gone on much further. Here as well, the trade would have gone on to his target, but he closed the trade just a little bit above 50% in his favor. Here as well, there are a few times where here, for example, here there are 3 or 4 trades where he was actually able to realize his take profit, but it seems like the trader is interfering with his trades quite a bit. Maybe he's also using a trading stop loss approach, but there seems to be a lot more potential here on his winners that he should try to capitalize. So experimenting with a different stop loss trailing approach, with a different take profit approach, maybe that would be interesting. We would recommend to use the alternative strategies for that. And that is a very easy, effective, and very, very quick way of just analyzing, are there better stop trailing approaches or exit approaches that would help this trader capitalize more on his winners, because there seems to be more untapped potential here. Let's take a look at the losses. So we change it here from winners to losers. And this is super interesting, because what we see here is that he is closing pretty much all of his trades at the stop, right? 88% of his losses are closed at a stop loss. At the same time, the green bars are really, really small. And this means that his losses fail right from the beginning. There are a few times, like here, this one. So we have 4 trades where the trade goes halfway towards his take profit, but then end up failing. So losses seem to be way more likely to just not work right from the start. So again, really interesting finding. Whenever you see such obvious patterns in your data, it means that there's something to explore. So again, my best guess would be to just go to the alternative strategies and see if there are different stop exit approaches that could help you improve your approach, because you definitely do have an edge, as we saw here from his equity graph, but there seems to be something where he is having some unrealized potential. And as you can see, once we switch here to filters, this becomes a lot clearer and more helpful. I also looked at his custom stats, and they are very, very strategy specific, so we cannot really comment a lot on them because we don't know the strategy behind it. But I looked through all of the custom stats, and there is not really something that stands out on a negative side, right? Here you have a negative custom stat, but there are only 5 trades in here. Here you have 32 trades, but stopped out is not really something that is going to help us, because those are trades where he stopped. So yeah, not much that you can do right away, except for maybe take a look at your exit analysis to see what is going on. Also, stopped out is an interesting statistic to have. What we have seen that quite a few people use it. However, you don't get a lot of value out of knowing that your trade stopped out, because you can see it in other areas. However, one thing that I really would recommend for this trader is to have some kind of qualitative comments or tags. When we look at his trade comments, for example, he has one for the trading day. But when we go to the entry, those are, again, very, very strategy specific and execution and signal related. They're not qualitative. So what I would recommend is to have some qualitative tags. I would not recommend to now just go into your entry comments and either rename them or start tagging something else here. So adding new custom or tags here in this case for trades where you followed or broke your rules. What I would suggest is instead use a custom stat. You still have space, you still have more slots for custom stats. So create a new one, call it trade criteria, trade quality maybe, or just maybe entry quality. And then you can track trades where you followed your rules and when you broke your rules. This will give you a very different look. Everything in your journal is very strategy related. And it's often very, very helpful to also see how often do you follow versus break your rules. It gives you a very different understanding of your execution, your discipline, and also if there's more edge here, or if the losing streaks, for example, are due to also breaking rules. So that would be really, really insightful for this trader. He does have a little bit of qualitative information. So checklists, he does seem to use them. And what I found interesting is that here, this comment, all mandatory, means that when he has a trade, he has all the signals present that are mandatory. So those are typically the higher quality trades, versus here he has at least one mandatory, but not all mandatory. And when we look here in the data, you can see all mandatory. So the highest quality trades, of course, we only have 8 trades, not the best sample size. But you can see the profit factor is absolutely astounding. A 5 profit factor is, you rarely see it. Of course, this is probably also due to the low sample size, but compare that to at least one mandatory. 1.8 is still a very, very good profit factor, but you can see the difference is quite significant. So it seems like there is a difference in quality of trades, and the way that the trader is using custom stats and checklists, I think this is probably something that he will be able to use very, very soon. The sample size on the custom stats is, for the most part, not great. You can see, yeah, there are some where he has a lot of trades, but overall, 2, 7, 10 trades is not the greatest sample size. So I would encourage the trader to just keep using his custom stats the way that he has set them up right now until he has a much larger sample size. And then one thing that you probably want to do and can do is look for what are the signals that make up your best trades, that have a high win rate, a high profit factor, a high expectancy, and then see also which trades have the lowest expectancy and the lowest profit factor. And a lot of traders, what they do then, especially professional traders, they establish a dynamic position sizing approach. So they are clearly able to see the trades where you have a higher expectancy and a better profit factor, and they are willing to bet more and take slightly larger positions on them. And what this does is that you value your good trades more than your mediocre trades. But it's really important that you only do this if you have enough data, and the data clearly shows you objectively which trades are the best and which are not as good. So this is something that in a few months, probably once the trader has more data points and the sample size is better, this is something that he can definitely then explore. So this is really, really interesting. Together then with one qualitative custom statistic, I think this should lift the trader's journal quality up quite a bit and give him completely new insights.